Hi everyone, and thanks for checking out my channel. I'm going to have a look at WTI crude oil tonight, having a look first at the potential for June contract crash, a look at my opinion about US production reduction, the optimistic situation, and what could be the next week scenario. So let's get started with the June contract crash. That's been quite a talk over the few weeks and even in the last few days. To me, the answer is basically that it won't be a crash similar to May, and we might even not see any sell-off in the coming 2 days or anything really major. The main reason for that is that the contango is gone. We just have the 2% that is usual between 2 months. Even July and August, that's been shrinking a lot since 1 week ago, where we were still having a huge percentage between the front contract and the next one. So yes, I think that's the main reason. The second one is that also the rollover is almost complete, or I mean the volume traded on the July contract are much higher than the June contract. I think in May it wasn't the case, really close to expiry. There was still a lot of volume trading on the May contract, so a lot of people still holding long position. This is not the case now, and on the fundamental side, the storage doesn't seem to be such a big issue right now, with inventory not pushing that high and the Cushing situation also improving, even if marginally. That should be enough to actually not put massive selling pressure on this. So I think we won't see any major sell-off here on the June contract crash. It might put a little bit of selling pressure on the price, but nothing major. The next one is having a look at the US production, and which is leading to my other point about the very optimistic view that we're having on the market at the moment. So the production reduction is about 1 million barrel a day, down from 13, and the forecast and projection are for a drop to 11 for the next quarter in 2020. It seems a lot, but the production is still very high. So at 11, even at 11 million barrel a day, that's still significant supply, and there's a lot of expectation at the moment that the demand will actually cover all of this, and this is why I think that the market is definitely getting over optimistic, and that we just need to be careful about this. Looking now at quickly at the quote report, there's nothing again that we could actually see suspicious for the move up to continue. Open interest positive, management is still accumulating long and reducing short. 350k net long position, which is not extreme, so still no sign of anything that could go wrong from the court report's point of view. And having a look at what happened during that period, was pretty much flat in terms of the price, but definitely accumulation under that 26.6 level that I was hoping would actually give some pullback, but that didn't happen, and did break out up to almost 30. So yes, definitely bullish at the moment. There's not much of a reversal in sight. The only thing I'll be looking at is on the 1 hour. We start to see some loss of momentum, and the last time we had that kind of loss was here on the 1 hour, and we got quite a nice drop from 26 down to 23. So I think we probably won't get such a big drop for the reason I gave before, between contracts and everything improving the situation as well. But my opinion for next week would be the first scenario, which I think is the most likely, which is a pullback here, pullback on the 4 hours 20 MA, which is will be roughly running at just below 28. So back on the 1 hour, just to make it a bit clearer, it would be something like this, drop there, but I think ultimately on this we are very likely to go and test that resistance area that will be much more difficult to break. So I see major resistance in the $35 area after we can see a small drop earlier next week. So the other scenario would be for a direct breakout to 35 from next week. I think this is much less likely because of the overbought position and that small divergence. So it's still, we need to cool off a little bit the indicator before we can actually push higher. I doubt that in that situation we can see anything more higher than 31 potentially in extension, but then we'll see probably some divergence on the 4 hours, and that will open the door for a larger correction, maybe potentially looking even at moving down to 25, but not my favorable scenario. I'm definitely looking at this. Should we retract on 28 and having some nice buying pressure showing here, no sign of divergence, a nice clear up, then we could start building long position from here for the new target to sit that time in that area 35, and probably no attempt to enter short in that zone here. When we'll be there, will be time to talk about the gap filling at 41, but I think that's another story. We'll need to overcome some major resistance before then, and potentially we could have some production ramping up again in the US should we actually start getting closer to production costs. So careful on this, but I think shorting from here is probably very risky, and I wouldn't actually try too much counter trend except for some really small trades. So yeah, that's about it. We'll do another check midweek, and wish you safe trading and good luck for the week, the coming week, and speak to you soon. Cheers, bye.